Most real estate investors do not make money through real estate. They buy properties, but they do not make money. In fact, they lose money. That's because they are the passive investors. In this video, I am going to share with you that what is the difference between active investor and passive investor, how you can become an active investor and make profit through real estate. So let's dive into it. What is the difference between active investor versus passive investor? When I'm saying active investor, I don't mean that you have to do everything by yourself. You don't have to take the paintbrush and start painting, or start managing your own properties. No. That is not an active investor definition. Active investor means you are always on top of it and you always know what you are trying to do. The first thing that you would ask yourself to know whether you are an active investor or passive investor is having a goal. Do you have a goal? Do you have a plan of what you want to achieve? And if you just want to buy properties and have no goal, no plan, then chances are that you are a passive investor. On the other side, if you have a specific goal to achieve, a specific cash flow return that you want, and in that case you are becoming active investor, because then you have a specific plan and goal and you are working towards that. Ask yourself this question: do you want to become an active investor? It means that do you want to have a proper goal, proper plan that you would like to achieve, or you just want to buy properties and don't know whether it is making money or not, because then you will end up becoming a passive investor and doesn't matter whether it's making money or not. The second point is that you will become a passive investor, or you are a passive investor if you don't know how much money it is making. It sounds simple. However, so many investors, they just don't know how much profit they made or how much loss. They just give all the details to their accountant, and if accountant says that yes, you have lost this much money, and in fact they are happy that they lost money because they can save tax, and as a result they are passive because they don't know how much money they are earning or losing. Whereas being an active investor is specific goal. Even though you lose, you retrospect, you reflect, and then you look for next year, what can you do that can make your investment a better investment? What are the things that you can change? So these are the point for active investor. Whereas if somebody who is passive, who do not bother year after year, don't do anything, just rely on others and being passive, and that's how the difference between active investor versus passive investor. The third point is that if you are an active investor, means you are inspecting your property periodically, you're checking, you're talking to your real estate agents and understanding what are the things that needs to be done with the property to increase the rent. Whereas if you're a passive investor, probably you have never visited your property, the property that you bought, you have never visited for the last 3, 4, 5 years. So you don't know what's happening. And this is a signal of becoming a passive investor, because you don't have time, you are busy with some other things. You are really not an investor. You are basically a speculating. You are thinking more of a, okay, fine, whatever happens, everything is going fine. Whereas being an active investor means you are on top of it. You go and inspect the property regularly. You find out what problem that is there and how you can rectify this quickly, and making sure that your tenant is also happy and you are providing all the services. As a result, you get the top dollar rent and your profit makes much more higher than the average investors. Being an active investor, then you focus on the outcome, not the number of properties. It's easy to say that I own 3 properties, 4 properties, or maybe 10 properties, but what is the outcome that you are getting? Passive investor focus on the number of properties, whereas the active investor, they focus on the outcome, what we would like to achieve through real estate, how much profit you want to make, how much cash flow you would like to generate. And that is the definition of an active investor. They have that calculation. They want to figure it out, how they can buy a problem and sell a solution, how they can turn that problem to a solution and keep it has solution property and continuously make a better cash flow. Whereas being a passive investor, you don't know, you don't have any goals, and particularly you have no focus on what you want to like to achieve. Whereas being a passive investor, you always look for how many properties you would like to buy. It doesn't matter whether it's a negative gearing, all or negative cash flow, and then you stuck after 1 or 2 properties because your income is limited. As a result, you can't buy so many negative gearing properties. Whereas if you keep on buying positive positive gearing properties or the positive cash flow properties, then chances are that you are making money and becoming more and more active investor. You might start as a passive investor, but slowly you move towards the active investor by doing all these things and making sure that your profit, you are making much more profit than the average investors. If you find this video is helpful, then like this video, subscribe my channel and turn the notification bell on, so you get to see more videos like this, and it will also help me to reach out to more people like you. The next point is that being an active investor means you listen more than you talk. You ask questions and you listen to other investors, other professionals' opinion, because you don't know everything. The more and more you ask questions and more you listen to them and then reflect and take decisions is better a definition of an active investor. Whereas a passive investor, they just talk, I bought this many properties, I did this, but they just don't want to take the feedback, they just don't want to take that opinion from other sophisticated investors, and they, as a result, they get stuck, they don't get the better result. Whereas being an active investor means you listen to others, you then reflect that how other people are doing, and you basically mimic their success, other investors' success, and get the better results. So active investor means it's all about listening others, listening other investors, rather than being passive and not listening to other sophisticated investors. The next point about active investor, that they build skills. It's a continuous thing. They learn new things, they build that skills, they understand, and as a result they implement that skill in the future properties. Then now, whereas being a passive investor means you have no interest, you don't have time, and you don't build skills. Being a passive investor, you do not do anything, you're stuck with your job and you're busy with other things, and you have no priority about becoming a sophisticated investor. So passive, as it says, that it is more of a laid back attitude, whereas an active means you are always trying to understand what's the market happening, how you can build that skill, and how you can implement these skills in your new deals. If you are an active investor, then you will have a specific time where you allocate that time and make sure that you look for deals, you talk to the real estate agents and a particular area that you are looking, and you talk to the other investors, and making sure that you have a specific goal to achieve, and that time is allocated for that. Whereas if you are a passive investor, then after the whole day, suddenly it triggers your mind, you see a deal in real estate website and look for that deals, and you never probably get a chance on inspecting the property. Whereas becoming an active investor means periodically, consistently, you go and inspect physically, you talk to the neighbors, you understand, you talk to the other real estate agents, and making sure that you get more opinions, more feedback, rather than just looking through the deals through real estate website and then start buying it. So you might end up buying a wrong deal if you just look at the real estate, and because on the website everything is looking lucrative because they take a nice HD photos and put it on that website, whereas once you go to that property and inspect it, you might see it's something different, and you might pick up a lot of, because physically you are actually checking that property, you are talking to the neighbors, you are making sure that all the real estate agents you are talking and getting a different feedback. I always tell is that find out those people who are already investing in that area and get their opinion as well. One or two investors, they might give you an upfront information of what is wrong, how they made mistakes or how they made profit, and you get the knowledge through them and make that in your investing journey. So active, as is always sounds, that it is about doing work. Yes, you have to do work, that's how you become active. And on the other side, if you just sit back and you don't do anything much, you become passive, and becoming a passive means you don't get much return, you don't make much profit, and that is how most investors do. They don't have a good positive cash flow and end up having only one or two properties. Whereas if you want to become an active investor, you have to work certain things, you have to have a proper plan, you need to go have a goal, and you need to go towards that goal. And by doing all these things, you will be achieving to your financial freedom, to your financial independence, becoming an active investor. I hope this video was really helpful, and thank you so much for watching. I'll see you next time. Bye bye.